We start here by jumping right in. Sam and I are talking about real estate and financial city centers when I press record.
And people don't realize how big real estate is around the world. It's like the 2008 crash kind of started with real estate in US as well. That what is the value of real estate in US, like residential? It's something around like 44 trillion or something crazy. It's much bigger than US economy.
Yeah.
So that's why. And even China is facing the same issues now with when it goes with real estate. Real estate is a very, very big asset class that people don't realize how big it is and how important it is and how many people work in that.
Sort of, the ultimate scarcity, the ultimate physical scarcity.
Yes.
And I mean, here we have record high concentration in the cities here in New Zealand. Large proportion of the population live in cities compared to the rural. I don't know what the spread is, but it's much higher.
Something like 87% around in New Zealand. So just, when you take Auckland, Wellington, Christchurch, and that's like majority of the population.
Right. Anywhere with the international airport, that's it.
Yes, airports, yeah. So if you look at historically, all the cities, the global cities or the large cities in the world for the last 2,000 years, they were all ports. So it doesn't matter, whether it is Singapore, Hong Kong, London, any large city you see in the world, it used to be a port back. So because that's where how you do trade and commerce, and that city gets rich. And the ports of the modern day are the airports. So it's like you just say, I do go to Dubai often. I spent 2 months there end of last year, and then their growth has been insane, and it's been led by an airport that has 100 million people a year passing through that. And Dubai is pretty small. I mean, it's growing really rapidly. And they have a vision to grow it really, really even more faster, which is insane, which we cannot build or do anything in Western countries anymore. It used to happen back in 1920s or earlier. We used to grow Western cities.
In the early boom days.
In the early boom days and stuff. And New York was built, Chicago was built, all those. But we no longer can build anymore in the Western countries, whereas they have like a massive, massive vision. In Middle East, that's what the difference I see. We don't have a vision anymore. We have very, very conservative vision. And also we spend more on consultants than actual doing the work than actual building. Yeah. So we have lost that ability to build. It's like first time I went to Dubai was 2008 or 9. And at that time, Dubai's population was 1.7 million, which is about similar to Auckland. And now Dubai's population is around 3.5 million, and by 2030 or something like that, they want to grow it to 8 million. Okay. So it is a rapid growth. The locals only comprise 8-9% of the population.
I mean, they have these huge, ambitious projects that sort of you see the brochure for on social media and things like this, things they want to build, right?
Yeah, but they have already built. A lot of them are built. Like, like 40 years ago, it was just a small village, backtown village of like, I don't know, 30, 40,000. Yeah. I don't know how many thousand people, and now they have an airport that has become a hub for a lot of the world, that 100 million people pass through it every day. And then they are building another airport that will have the capacity of 250 million people a year to travel through.
To transit, yep.
To transit through. So it does, no one does anyone, like in New Zealand, no one has a vision to build for the future. Or in all Western countries. It's just, it is very, very different.
So what type of activities are you seeing happening in Dubai? Particularly anything with the Web3 space?
Oh, massive opportunities. So they are bringing in regulation, they're regulating the space. So then corporates and enterprise can interact with it. They see this as an opportunity to take lead because when it comes to fintech and the finance industry, there are existing centers like New York is and London is, and then Singapore and Hong Kong came later on that scene. and it is very hard to dislodge a competitor in an existing industry. But if it is a new industry that is starting, you can build and create an ecosystem for it and get a heads up against other competing cities for the same. So what do cities compete for? Cities or at global stage compete for talent, the best talent. Dubai's made it really, really easy to immigrate for anyone. Pretty much, anyone can immigrate very easily. That's how
like
they grow.
Talent or no talent?
Yeah, talent or no talent. Yeah, basically, if you have no talent, then you learn very less. If you have extreme talent or extremely skilled and networked, then you can earn infinite amount. So whereas try immigrating to US from say Egypt or Philippines or India,
Right.
it will be very, very difficult legally. I don't mean crossing the border, legally, or US or Australia or any other developed country. It will be very challenging to do that. Whereas to move to somewhere like Dubai, you could get it there within without any effort, without spending much money.
Right.
And so they are the talent hubs. And that's how it used to be. It's like whether it was the old school Athens or Baghdad or Constantinople or Istanbul, or like back in those days, those cities were the hubs for talent, because that's where all the most educated and the most skilled people could go exchange ideas and build things together. And that's what global cities do, whether it's Singapore or Dubai or any, they become hubs for talent. And US was the hub for talent for a very long, a part of the last 100 years, whether it was after Second World War or after any big major event, it would attract the best talent in the world. So that's why if you look at all the companies started, or the Fortune 500 companies started, how many have been started by immigrants or the children of immigrants? Because it attracted the highest quality immigrants, whereas it's slowly not being that place.
They've had a tremendous run if you talk about America.
Oh, absolutely. And it is still having tremendous run, and it still leads the world in few different things. But it is people or other city or other states or the city states have seen that, okay, this model can be replicated. There are only two things that you need to build a really, really good or three things actually need to build a really good company, country, city. One is high quality talent. So the quality of talent matters. And so you either educate them yourself, and spend 20 years as a country or as a company
from childhood
and take that expense, or you just let them immigrate to your country and don't worry about supporting them the first 20 years of your life. Let some other country do that work and just get them in. And that's what Canada has done.
But it's true. Yeah,
it is true. And that's what US has done, an HB1 visa. And that's why if you look at like any of the companies, like whether it's Google or Facebook, and see how many engineers work there that are from South Asia or like Nigeria or Philippines or Vietnam and so on. So that's one of for talent is the first pillar. The second one is, out of the three pillars, the second one is capital. And US has been extremely lucky that it has had access to capital because of the strength of US dollar and the strength of its finance industry. It has had access to the most amount of capital, whether it was VC funding. Even now, if like startups who start in New Zealand, they are extremely poorly funded, they are very underfunded, so they don't get many shots on the field. If they make a mistake, they cannot pivot and start again. Whereas
you mean if they get New Zealand funding?
Yeah, if they get New Zealand funding. Whereas in US, they have a much more funding. So if you make a mistake, you are allowed to make a mistake, pivot, and start again, because you have so much more runway that you can do that. Whereas in New Zealand, it is much harder to do that. And so that's why it will always be harder for New Zealand companies to compete against US-based startups, and then or even European companies or Asian companies to compete, because no one has as much capital or access to capital at the cost as well. Because yes, African countries can borrow as well, but the cost they pay or the interest they pay is much, much higher. So access to capital is huge. And then the third thing is access to market, and that is something that the Asian or Middle East or North African or Sub-Saharan African companies can compete, because they all have, or Southeast Asian companies because they all have access to a huge market, whereas in New Zealand we don't have access to huge market.
Right.
So that is a major drawback. It's like, if you look at any of the New Zealand success stories, whether it is Zero or Allbirds or any of them, the first thing they do is eventually leave New Zealand, or first thing they do is leave New Zealand pretty much because they want bigger market. So Zero is no longer listed on New Zealand stock exchange because they don't have access to the same amount of capital and market here. So they are listed in Australian stock exchange. And same with Allbirds, Allbirds is, if they just sold to New Zealand customers, they would have few thousand shoes sold, and that's it. You have saturated the market. So
I'm a customer. I would have been one, but completely saturated very quick.
Very, very quick. So that is a massive challenge. You need access to capital, access to market, and access to talent. Those three things. That's pretty much the basis of every good company, of every good country, of every good city. So in New Zealand, we lack, unfortunately, these things.
Right. So, I mean, there you've said nothing about policy. You've said nothing about like demographics. You've said, nothing about natural resources, how wealthy these places start out to be, right?
No, it's like what natural resources does Singapore have?
Exactly.
It has much higher GDP than New Zealand. Back in the days when it did get independence, it was way, way, way lower than New Zealand. It's GDP per capita. And it's also not only about GDP. That is a very wrong metrics, or not very wrong metrics,
but it outdated?
It is kind of, it doesn't give you the full picture because you could have a high GDP just because of few big companies or few rich people, but that does not give the whole picture. The other things that I look at is the experience of people on the ground and their life expectancy and things like that. It's like a Singaporean life expectancy is like 83, 84 years or something, whereas US is decreasing at 77. So you have like 7 more years on the planet if you are born in Singapore than you're born in US. On average, of course, rich people in US have the best healthcare, but the poor don't.
It can be surprising because you think that someplace like America, is the promised land and you'll be fine.
And if you're homeless in US, the life expectancy is around 40 years, which is less than sub-Saharan African countries, something like that. So so you have to work that out as well. Whereas the housing situation and stuff, it's maybe if you're an immigrant, you'd have a different experience. But for the local Singaporeans, they can access housing because of how the government works and how it is set up for lower the cost. So they have more buying power at the end of the day. So you have to look at those sort of factors. They don't even have water. What natural resources Singapore has? They have to buy their water from Malaysia, and then refine it and sell it back to them. But they had to find really, really innovative ways to deal with lack of natural resources. Whereas this is also called like the curse of natural resources. When you are just rich in a natural resource and it's not managed well, first of all, it stops you from innovating because you're making all your money from natural resources. There are some countries that have done exceedingly well, which is like Norway. So Norway and Britain found oil at around the same time, whereas Britain privatized it, and a lot of the profits from the North Sea oil in Britain or in UK were privatized, whereas in Norway, a lot of those profits went into their sovereign fund, which then went and invested in the stock market and other places in equities and lots of different diversified investments. And the people reap the benefit of that. Now it's the world's largest sovereign fund, multi-trillion-dollar. I don't know what's the net worth. It varies, but it's probably over $1 trillion easily. And so it's the wealth of every citizen. And some Middle Eastern countries have done that well. Some haven't been able to do that as well. That they've been able to set up sovereign funds, make money from that, and then invest that money back into the infrastructure of the country. Whereas some have just made themselves rich. So it all depends.
And so you've mentioned three big things here, right?
Yes.
Talent, capital, and access to market.
Yes.
So can we rate New Zealand on these three things? Let's start with talent. What do you think?
So talent, there is a lot of local talent, but then when I look at people working in blockchain, it's like I find more Kiwis working in blockchain overseas than they are working here, because
Yeah.
they still need that access to market and access to capital. So that's what makes them leave. So they might not have left physically, but they would be working for overseas companies or building their companies in other jurisdictions where they can get access to the other two things. So it's like the founder of ENS, like Ethereum Name Services. I think he's also Kiwi. There's quite a few Kiwis in this industry, but they are not here. We don't know them here. And they've built companies worth hundreds of millions of dollars overseas. So yeah. I do feel like, unfortunately, New Zealand lacks very low on all three of these because of our geographical isolation. First of all,
and just maybe to give folks some idea, you've given us quite a good broad background, but like specifically, you've worked in many different places, and you've been involved in business in a lot of different areas, right?
Yeah. Let me give you a quick background about myself before I go into rating New Zealand and how does New Zealand rate to some of the other countries and what it can do better. But so I started here. I grew up in India. I came to New Zealand 23 years ago or so. Yeah, I thought you've got one more guest.
I don't. I would have told you in advance.
Okay, that's okay. Yeah.
Please continue.
Yeah. So I grew up in India. I studied computer science and came to New Zealand. Went to Waikato University, studied marketing or international marketing and management. And after that, I've been early in lots of different industries. In 2003, I was doing Google AdWords when most people didn't even used to use Google. They used to use still Yahoo and Alta Vista and Lycos and those type of search engines. And I was using their AdWords product, which pretty much I was probably one of the few early users. And that helped me build my first company in e-commerce. I built a platform, we had our own brand, our own products. It was one of the product was called Herbal Ignite. It's still out there in New Zealand. Yep. So I sold that, and now it's actually owned by a publicly listed company called Just Water in New Zealand. So they now own it. I sold that company in 2015, and after that I went into esports. I was COO of a esports platform. Another co-founder in New Zealand who's still here, and we went to San Francisco. We promoted it there, and then it got acquired in 2018. And after that, I wrote books on tech startup, and I spoke at events and did all sorts of fun stuff. And I've been running a podcast in Web3 space. Last 3 years, I've been working in Web3 full time, and I haven't worked in New Zealand for last 3 years. So I work with some venture funds, and I connect them to deal flow. So startups that are raising, that are really, really promising, as well as I connect them to family offices or LPs, like limited partners who want to invest in venture funds. So that's one of the things I do. And I also am an advisor for 2 or 3 different Web3 startups. One of them is called Autowhale, which is building a platform for like an infrastructure as a service. So just like how there is SaaS, there is IaaS, or infrastructure as a service platform. So it provides infrastructure for crypto funds, for hedge funds, for institutional traders to trade whether it is crypto or other digital assets at an institutional level. So yeah, it provides platform that uses machine learning and algorithmic trading and all that. So because most people who want to do that, they don't have the technical knowledge to develop a platform on their own.
Right.
So so that's what we provide at Autowhale. So it's called Autowhale. The company is based in Austria.
Why is that?
That's where the founder, original founder, is from, and that's where a lot of the team is based. So So yeah, so I'm helping them with their growth and stuff. So yeah, a lot of European countries have the same issue as us, and that is that they are small market, lack of capital, lack of talent.
So even the Europeans feel like their market is small.
Because it's not like one country, it's so many different countries,
Okay.
and yes, but they don't have the problem of isolation. I do feel a bit more isolated here in New Zealand than it's like, so okay, so there's a currently in like next month there is a digital asset summit, and a lot of the fintech industry is still based in just 5 cities, like New York, London, Singapore, Hong Kong, Dubai, all these places, and they're all in Northern Hemisphere. There's none
Yeah,
of them
okay.
in the Southern Hemisphere.
There's opportunity here.
So yes, there's absolutely, you're right. There is an opportunity to set that up, but any of those like the government needs to have, or the body that here needs to have that vision to set that up and build that. At the moment, like no one even dreams to do that or can thinks it's possible. So then how do you do that,
Yeah, how do you compete with London on finance, even if it's blockchain?
Oh, you could. There are smaller jurisdictions like Malta and those, and Lisbon has become a very big hub for Web3 ecosystem. Lisbon is not that big, and Portugal is not that prominent of
Right.
an economy. But if they could do it, New Zealand can do it too. But no one here has the vision or the desire or the drive to make that happen. So
like what's happening here? If we're rating low on these pillars, next up was access to capital.
yes.
To me, that should be as easy as being online.
Yes.
It should be a global market. Should be all right for people here to find capital. What's the real story?
That's very interesting. Why don't we have access to the same amount of capital? There is a huge concentration of capital in certain parts of the world, and the crypto and the blockchain industry is unique, and probably there is more access to capital for those firms or those startups here than for other regular Web2 startups. To give you an example, that even in US, if you are in outside of San Francisco or New York, it is going to be so much harder to raise money
Okay.
than if you are in those two cities. But our industry is unique, like blockchain industry, the Web3 industry is unique because decentralization is at the core of the of it. So most companies are decentralized, most VCs are decentralized, most VCs and capital in this industry invests globally. So this is actually one of the best industries to be in because this has decentralization at its core.
Yeah, I like that a lot. And it's good that, if you're going to be investing in Web3 startups or if you're going to be investing in blockchain, that you also
Yes.
are aware of these values and participating in them and realizing that you don't have to be maybe in San Francisco.
Yes.
One
But
more-
it still helps. So let me give you an example of, so I was part of the founding team of a developer tool called cookbook.dev. That's just the URL, but I still have a small stake in the company. And so there we built a tool for software developers to create smart contracts. So just like how there is Canva for designing, so this is for software developers to design and create a smart
Yeah.
contract really easily, and use like templates, pre-built templates and stuff. So yeah, it's a developer tool, very, very simple, easy to explain, utility and all that. And then and we're growing at 10% week over week, and we needed funding, and we're based in LA, in California,
Right.
and which is not that far from San Francisco.
Sure.
I've done the road trip a few times, LA to San Francisco, or multiple times, and still it was harder to raise capital, even in blockchain, even from LA, compared to San Francisco. So in the end, told one of the founders, or like one of the original co-founders as well, that okay, look, if you're on a race, then just have to move. So, and then as soon as we moved to San Francisco, within a month the round was filled, it was done. And most of the like we had other lead investors interested, but then we got a much bigger investor. They were trying to raise 1 million, ended up raising 2 million. The round got oversubscribed. As soon as we had a anchor or a lead investor from San Francisco, immediately everyone wanted else to jump in and wanted allocation in that startup. So it's still just the reality that even if you look at the stats now in US, where the startups are being funded, and if you just look at that Bay Area, which is San Francisco to Sunnyvale to San Jose to all that area, and it's like it's still maybe half or more of all the startups funded in US. Isn't that just one small geographic area?
I mean, it's kind of sounds like a tale as old as time here with humans and their networks. If a human can only live in one place at one time, kind of thing.
Yes.
And so maybe it's just too hard to overcome that network effect.
Yeah, but it is better than before. It is much better than before, and it is much more likely that you will raise if you are in blockchain internationally than you are in a Web2 startup internationally.
Okay.
So, if you are and the most of the other investors, they were all spread around. So once we got the lead in San Francisco,
I've had a look at cookbook.dev. I think it looks very interesting. I'm actually going to recommend it to my students as a resource. You have this button on there, a no code button.
Yes.
And so I looked up some like smart contracts and as it says, with no code, the fields will be provided for you to, input and go about whatever it is that you're after. Is that heavily AI incorporated?
Yes. Yeah. It is. It is. It is interesting though. It's like, I have this issue with like, okay, there is no code and there is the code. If you are building a developer tool, it is very tempting to go down the no code route and build a no code platform. It's very easy to explain it to VCs and explain. But in reality, if you really want usage, build something that still uses code. I'll tell you the reason for it. This sounds counterintuitive, but the reality is that a no-code person, a random person, can go and create a smart contract on that. So this is just a smart contract example. But that person is not going to know what to do with that smart contract. That person won't know how to integrate it to a user interface, how to do the other things, what other connections it would need, and different types of what do you call, like DevOps and other parts of that
or
thing.
even like upgrades or being able to service and
security and all those. Like there's lots of other things that go into it. Software development is so much more than just code of a freestanding code. So even though you might use no code and build a part of it, but then there's so many other things to think about, and you can appreciate and you come up with better solutions when you do understand code. So all the users of pretty much Cookbook, or majority of them, are all coders, are all developers, and that's what I realized early on. And so what I did was I connected them to Remix. That's how I got the growth for it, with Remix IDE, which is a development platform that Web3 developers use. So now we got them a plugin inside Remix so that people can call up a code for any smart contract, because pretty much it's developers who use it. It's just like for AutoWhale, we are creating we have already created, and it's used by crypto funds and all that. So yes, it is very tempting to create and open it up for retail, but they are not going to be able to create their own strategies and apply them and connect to different APIs and do at that like institutional level. So we'll still lack usage even if we add some of those no code type features.
Yeah, I mean, part of it's like a same thing with AI, right? Part of it's like a buzzword, or like there's a certain marketing cachet that goes with it, like, oh, it's going to be easier to do this coded activity, and I'm maybe not good, or I maybe think it's too hard to learn how to do myself.
Yes.
And I still find that, right, you need a little bit in order to get there, to get started.
Exactly right. And then you can get more out of it if you know a little bit. Otherwise, you get, I don't know, substandard results.
Well, yeah, otherwise it's not going to work. Like my students
Yes.
will come to me and be like, oh, it worked yesterday. And I'm like, oh, what changed between yesterday and today?
Yes.
And if you don't have that deeper understanding of how things are fitting together, then you're not going to be able to identify these problems.
Exactly right. Yes. Let alone just identifying, think about it now, building a full solution for your company, for your startup. And then there will be so many other moving parts to it and so many things that it would lack that it's just not going to work out. You'll have to, yeah.
So you wrote a book called The 30-Day Startup,
Yes.
How to Create a Successful Tech Startup in Less Than 6 Weeks. No, in 6 weeks for less than $50,000.
Yeah. Okay. So there is a nuance to that. So that is just creating the first MVP. That does not mean that it is finished. The idea is that you build and create your MVP as fast as possible and put it out there in the world so that people can start using it and start providing you with feedback. So
Right.
I don't mean by providing feedback as filling out survey. By providing feedback as in I mean is do they use it or not? Do they come back to it or
Okay.
not? That is the real feedback. So if they don't come back to it, surveys don't matter. People write whatever they want in surveys. They often pick the first answer in different things, or they take things, or they answer as if of how they would behave in an ideal scenario. That's not what they, it's like asking people that, oh, do you want to be healthy? Do you want to be fit? Or they'll say, oh yeah, I want to be fit.
Yeah,
But
of
then
course,
you have
yeah.
to see what they have to really do. Do they still eat fast food? Yes, they still do. Do they still find it hard to exercise? Yes, they still do. So yeah, we have to see how they behave, and so the only way to see how they behave with your product is to get your product out there and get that real life feedback and do it as fast as possible and do it in as quickest way, the easiest way, and the lightest way as possible so you can pivot.
So when you get that MVP out, that minimum viable product within 6 weeks, what does success at that point look like?
So to give you an example of that, I wrote that book along with Will, who I owned an agency with, and we wrote that book that we wanted to, practice what we preach. So we wrote that book in 30 days and have it published and
Okay.
everything in 30
That's
days.
fast.
So, and this is while working full time and
Yeah.
everything. So the goal was every day write 1,500 to 2,000 words. Doesn't matter how tired you are at the end of the day, like when you wake, doesn't matter when you want to write. And this is written in 2018. There is no ChatGPT. We had to have like a manual person editing. And so
You actually had to do it.
yeah. So you have to actually do it from the conception, the idea, the structure to everything yourself. And it was fun as well. It was a lot of fun. But it can be done. It's very easy. And did $0 of marketing, did do nothing, just put it out
Right.
there, and a VC in India picked it up and he really liked it and he recommended it to everyone in his batch, all the founders, and he had like 200,000 followers on LinkedIn at one stage, and so it went viral and it became bestseller on Amazon. It got really, really good reviews. So it's just purely organic, purely luck. I would say it's just purely luck.
Purely luck.
Nothing else.
Well, I mean,
So that's the measure of success. So we did it in a form of showing it, but then I have incorporated in that like a lot of my growth lessons that I learned, and how I implemented growth, because 6 weeks is just to get started, and I would say 6 weeks is too long in this day and age. It should not be more than 6 days. 6 days is more than enough. And I've built MVPs after that, like in 2 or 3 days. The measure of success of like that is like what people call product market fit. How do you know you have achieved product market fit? It's very, very easy. It is when you are unable to deal with the demand. So it's like you have so much demand that your website is crashing.
Okay.
Yeah, you have so much.
You can't fill all the orders.
You can't fill all the orders. That there are lots and lots of orders unfilled. And I don't mean that it is just busy work. So that's why I was trying to find a term, but I couldn't think of it. But so it's not mean that you're just doing busy work, that you're just posting on social media, or you just got busy with other things. So that's not busy work. Yeah. There is just so many customer inquiries that you're unable to answer. There's so many people wanting to sign up that your system can't cope. So when your system can't cope, that means that, okay, you have reached product market fit.
So if you're sitting around sending out surveys going, how do I get a bigger email list? That's not
it. That's not product market fit. So it's just because you're busy, because you found busy work to do, that's not product market fit. Product market fit is that demand is so high that no matter what you do, you cannot fulfill. So that's what happened with DoorDash. Their MVP is very simple. Put it on a piece of paper, put it on universities. If you want food, call us. They'd go and buy whatever people want and deliver it to them, and that's it. And then their phone would ring that they were unable to even have a meal, the co-founders, because they'd continuously be getting these orders in their university campus.
The book you wrote you said it was 2018 and it came out in 2019.
Yes.
That was, of course, a very famous year in the history of planet Earth. How are things different now, do you think, if you were to do it again post-COVID?
Oh, so do you mean about my second book or the first book? Because the second book was about COVID and about pivoting.
No, that's a good segue into your book about COVID as well. Like how did the COVID change the landscape in sort of tech startups, entrepreneurship, and that world?
I think COVID, this is a bit morbid, but COVID did help it a lot. Okay. Because I'm talking only specifically from the perspective of tech startups. So there are few things that happen, and that is that tech startups rely on internet, and people got more open to buying things online, working online, doing everything online. So that has created a lot of opportunity for people who are involved in tech startups, because as soon as you move more things online, it creates millions of jobs. Like then immediately you need, okay, someone now needs to manage their social media because they need social media presence. They need content creators. They need someone to look at their analytics. They need someone to manage their ads and all those sort of things. So immediately it created a whole bunch, and then all these things are being supplied by products, SaaS products and things like that. So it created a massive opportunity for people to move from physically bound things to internet bound things. So that's the biggest change that happened. So it is a massively positive thing.
So just sort of the Zoom revolution, where we're all right with everything being online. We're a bit more comfortable with it.
Yes, we are more comfortable now with it. Became like acceptable, socially acceptable to do that. So, and then people never went back to the old school ways.
When I asked you to come in and have a chat, I thought we were going to talk about trends in Web3. So maybe I should ask you about Web3.
Sure. Go ahead.
You mentioned you have a podcast. I've seen your podcast, and just your tagline reads here, Web3, NFTs, blockchain, crypto, DAOs, DEXs, DeFi, AI, ML, metaverse. That's everything, right?
Yeah, that is everything that is kind of associated with the decentralized tech or Web3, or because like people ask me, how do you define Web3? And it's like, I don't know. It changes. Like, how do you define mobile tech? There's so many things that part of it. Are there, microprocessors part of it? Are like GPS signals part of it. So it's like, so Web3 is a loosely defined term that is to do with technology that runs on blockchain, that's decentralized, that is transparent, that is permissionless, so anyone can build on it. But then it also merges with other tech. So for example, these days we have with the rise of AI and machine learning and things like that. And I do think it will create a lot of products and startups that sit at the cross section of these two techs and
Specifically AI and
yes, specifically because AI is pretty much is going to impact nearly every single field in the world. So it will have this it will rub off, and we will need more and more blockchain because of AI and vice versa.
and vice versa.
Yes.
So maybe you could give us some examples or thoughts about things that you're seeing sort of right now in
Yes.
terms of the conversations that you're having, either with founders or what have you, that maybe we'll be talking about in the future when these products hit market.
Absolutely, yes. So I'm just thinking, where do I start? So I do talk with lots and lots of different founders every day, whether it is going to conferences and interviewing people or interviewing builders or founders reaching out to me because they want me to introduce them to a VC in blockchain or something and sharing their ideas with me either on my podcast or just privately. And I am seeing some very, very interesting cases. I personally do think that stable coins are going to be very, very big internationally. They are already worth hundreds of billions in their market cap, but a lot of, for me, what I feel like the technology that gets adopted or gets big is the technology that gets invisible. So, for example, it's like you turn on your TV remote to watch TV. You do not have to learn about it. You do not think about the infrared signal that your remote is sending to the TV, the circuits that your remote is using. You had to worry about nothing, none of those sort of things. And the same thing will happen with blockchain tech. Right now, for some reason, we are requiring for people to learn about their wallets and or like digital wallets and learn about so much new jargon and so much new tech. And until that becomes invisible, it's not going to get picked up. I mean, a lot of people know about internal combustion engines and how they work. I mean, of course, they've gotten much more complicated with fuel injectors and timing and lots of things. But even if you don't know any of those things, you can still drive a car.
Right.
So once we reach that stage with blockchain, it will work. And same thing is happening with stable coins are starting to become integral part of the financial ecosystem. They are allowing transactions between companies, between products, between different wallets and all sorts of things. And there are more and more new products that will use them as underlying architecture. PayPal is already using stable coins. There's lots of companies that use stable coins when they want to move large sums of money because there is Bitcoin, but then Bitcoin still has price volatility. It goes up and down, and as a company, as a supplier, you want to know your costs. You want to know your costs that, okay, you're going to spend this much money this month. So what if that goes 10x more or 10x less and it's wavering? So you cannot do business. So stability is key. And stable coins, since they're pegged to a certain asset, whatever that asset might be, US dollar, euro, could be anything, it provides that ability to transact or build on top of. So they will be used a lot, and there'll be a lot more products in stable coins that you will see. I had a very good conversation with Senator Chris Rothfuss in US of Wyoming. So Wyoming is planning to introduce lots of different, not lots of different, but a different stable coin that is backed not 100%, but 102 or 104% by the
Just
state
in Wyoming.
No, for the whole of US, like anywhere. It's just blockchain. It's like
anyone can use it,
yeah,
but
anyone
it's
can
coming out
use
of
it, but
Wyoming.
it's just backed by the government. I mean, the state of Wyoming and stuff.
Right. Wyoming is crypto friendly.
Is very crypto friendly, and they have like all these innovative plans. But of course, they have to rely on the US government, and like they might. But the thing is that it's very interesting because US is very different. Every state has its own its own jurisdiction.
Yeah.
And so they might be allowed to do it. I don't know what's the status now, but they are planning to do this year. But they won't be the only one. Nearly every country is looking at some form of, or every state or jurisdiction or cities, and there will be a lot more products in that space. That is just one of those spaces. There's lots and lots of things that are happening. There is a lot of noise, and there's a lot of new companies coming out that want to tokenize real world assets like RWAs. But then I do feel like it's there is a lot of issue with regulation in that space. With real world assets.
Well, trying to map the current asset into a new sort of decentralized form
Because
maybe come with some friction.
A lot of friction with the regulation side, because then where does it not become a security and become a security and all those sort of things. So there is still issues with that. I have seen some interesting projects in DePIn. DePIn is very big at the moment. That is like the narrative of 2024. Like it is decentralized physical infrastructure. That is DePIn.
Is that different from IaaS, infrastructure as a service?
Very different. So infrastructure as a service is pretty much kind of like a different version of SaaS.
Okay.
And that infrastructure, I mean software infrastructure. This is what I mean is like DePIn is like say solar panels, and you have solar panels on your house. So the project I came across that I interviewed is based in South Africa. This is not a problem we have in New Zealand, but a lot of the developing world, there are something called load shedding, and they have power cuts every day for hours. And so how do you run your factory, your warehouse, or you have to have your own generators, and what do the people in the neighborhood do during those power cuts? So they basically what they do is they go and install the solar panels on the roof of the business, and then the houses in that, or the other smaller factories in that area, can use the power from there, and then whose roof it is, they get paid some form of remuneration based on the power that is used by the neighbors and stuff. So basically this data stays on chain, and then once a fortnight or once a month, everyone else gets charged directly from their digital wallet, and these guys get like a small cut of it for running this infrastructure for them. So, and they're already making money. A lot of them are already making money, but it is a very, very capital intensive exercise to do this. So I do think that the adoption would be slower, and it will take some time. But basically then it can run on its own as a decentralized small unit.
Yeah, that's a really good ideal, is that in these smaller areas or areas with a lot of disruption, like
Yes.
you mentioned about South Africa, right? They've had a lot of electricity grid issues, the past number of years. And, it's a perfect example of an idea that could be realized.
Yes.
In terms of being able to share power generation and have everybody sort of earn their equal share.
Yes. So this is kind of like, it's a physical, that's why the DePIn. Yeah, so that's the physical and the decentralized physical infrastructure. So there are some use cases of that. So I've seen a lot of interest in DePIn this year that I didn't see earlier.
Yeah.
And as always, like there's a Lightning Network has started to get more adoption in some parts of the world. So there's few different innovative things coming up, but then often innovation comes from where you kind of least expect it, and you don't and how people and culture reacts to it and stuff, and then something completely random becomes really big, and that ushers in the next sort of so-called bull run, as people might call it. The one thing that is is completely game changing, and that is the ETFs. And if you look at the gold price over the last few decades, and when the ETF was introduced before, few decades before that and few decades after that, and it's completely different because it brings in a lot of liquidity from institutional investors, and institutional investors are still massive in every asset class. It's just matter of time where a lot of the retirement funds, I mean, it's probably still already happening via Goldman Sachs and JP Morgan and all these. They used to be on the sidelines. Now they are investing, or they have their own products for Bitcoin ETF. And then it will eventually go down to Ethereum ETFs or other ETFs as well. And more retirement funds or sovereign funds will start investing in these sort of assets as just for diversification.
Do you think we'll see an Ethereum ETF?
Oh, absolutely.
Yeah.
We will. It's just a matter of time. If probably there are already people working on it.
Oh, there definitely are people working on it.
Yes.
Whether or not it takes another 5, 6, 8 years
Yes.
until it
So we
gets
have to
approved.
still realize this is such a new technology. You know, it's only since 2015. And the reason why I'm interested in this is because it is whenever there has been an innovation in money, it completely changes the global economy. It makes the size of the global economy 10x or 5x or something. It is a game changer. So, for example, when we went from coins to notes, that level of, or when the first public markets in Amsterdam were born, you know, with the East India Company that became a $9 trillion or more in today's money, or probably 11 or 12 trillion dollar company in today's dollar terms. Of course, they did a lot of wrong things in past.
A few black spots there, but
Yeah, lots of black spots there. But there's just an example of what enabled them was the funding. And even if, like, during the Civil War, the North could in US fund itself, just like the North had its own currency, South had its own. In the end, it does come down to the financial innovation of so who could make and sell their bonds for funding their army and things like that. So just the North had the greenback, and then the South had silverback or something, or like, that's why the notes,
dollar that remained is
the
called
dollar
green.
that
Yeah.
is remain is called that. So and so it was a kind of a fight of the currency as well. So whenever there is innovation in currency, whether it is in some new forms of stocks and stuff, so it's like, imagine how many companies are listed in public markets all around the world, not only New Zealand stock market or NASDAQ or S&P, and how many companies has it funded, how many jobs has it enabled. And now we are taking this whole model and decentralizing it and opening it up to pretty much to anyone. And not only that, you're making money programmable with smart contracts and other mechanisms due to blockchain, and making it transparent, making it permissionless. When you add that level of superpowers to money, or to the whole finance industry, it enables more people to do things. It's just like in the growth of Bangladesh after the Grameen Bank, that gave people access to capital to start that small, get that sewing machine and start stitching clothes and stuff. And it changed the face of the country in a way, provided employment to millions of people there. So access to capital is massive, which is once again the pillar,
Yeah.
one of the pillar. And whenever it has been done, whether through a stock market, through any new innovation, through bonds, through trade, any new innovation that didn't exist before, it changes like the global economy completely. And this blockchain thing, smart contract thing, is a innovation, like a financial innovation that can do the similar things. But
I love how optimistic you are.
yeah, but at the same time, it is super complex. There's lots of issues, don't get me wrong. And the more complex things are, that means there are people who are smarter than others who can exploit it, and who exploit it for the wrong reasons. So there's any new field that is growing really fast. ends up with snake oil merchants and, scammers and so on. So
any opportunity is going to attract those
yeah, any
folks.
opportunity is gonna. So this industry, just like a lot of other industries, faces that. And just like when the email was new, your email used to be pre-Gmail era. I don't know if you remember the spam you used to get in the pre-Gmail era. You probably were very young. You probably didn't have email and stuff.
I did have Hotmail before Google introduced Gmail. Yeah,
and then they used to be full of Viagra scams and the Nigerian prince scams. And
I must say, spam filters have gotten very good. Email spam filters.
So that's the thing. So we are still in the early days. So hopefully we will get companies that will figure all these scams out and rug pulls and figure all these things out. So any new industry is going to have that, and especially when it is so decentralized and so permissionless that anyone can build things on it. So there will be good people and there will be bad people who would want to exploit it. So yeah. So but that you can see that as a problem, or you can see that as an opportunity to build that service, to provide that service and deliver that value to customers. So go and build a company in the security side in Web3. And because if the problem exists, you will do really, really well because you're solving a real problem.
Very, very well put. I've got some rapid fire questions.
Go ahead.
To finish us off.
Yes.
What's your next book going to be about?
Oh, I will have to write something about decentralized tech or the future of money, something around that topic.
It's a great topic. And you've been to a lot of places around the world. You mentioned that you haven't really been staying in New Zealand for at least the last 3 years.
No, so I live in New Zealand, but I work overseas.
You work overseas.
So a very decentralized way of doing things.
What's the if you could only pick one, what's the best place to do business in Web3?
Oh, best place to do business in?
Let's say I'm a recent graduate from university and I want to go pursue something, and I'm going to move. Where would I go?
So there are few places that I would say you would go based on what you need, what you want. If you are working in something around the financialization of things, then you would want to pick one of the cities like Singapore, Hong Kong, Dubai, or London. Maybe not New York these days because there's a lot of uncertainty with SEC where people don't know where they stand. Or even Zug in Switzerland, which is like a small village, but it's got thousands of
shout out to Switzerland.
Yes, thousands of companies in this space. If you're in that, but if you are building something like a developer tool or something like that, which developers are going to use, then you would want to be based either in San Francisco or Bangalore in India.
Okay.
Because there is a huge density of developers, so you would want to see where your market is. And then be based there, so you have proximity to the market, you understand your customers, and so on.
Do you have any tips for a podcaster?
Oh,
especially in a crowded space like blockchain, Web3.
Okay. So then get really high quality guests. That is tip number 1, and tip number 2, which is a lot of hard work, and that is just post a lot. Make clips of it, put them on TikTok, put them on Instagram, put them on every platform, and Reels and YouTube Shorts and everything, and then engage with every person. That is the painfully hard work.
I was gonna sounds like a ton of work.
So it is a ton of work.
Are you on TikTok?
Yes. I am, but I don't even post much these days. But yeah, I used to post, and I used to get a lot of people engaging. And the best videos I've gotten are all on Bitcoin back in the days, 2-3 years ago, and we get 100,000 views and stuff. But I don't do that anymore. It's too much time. It takes.
Last question for you today: Who is Satoshi?
I think it's a team of people. It's not
team?
one person. It is a team. I would think so. Yes.
All right, Sam. Thank you very much for coming in today.
Thank you. It was an absolute pleasure, and thank you for hosting me.
Thanks for joining us, folks. Look out for the next episode of the Blockchain New Zealand podcast, probably in the same spot you found this one. Cheers.